Am I audible? Yes. Thanks. Good afternoon, everyone. It's my pleasure to welcome you all to this session, Composite Insurance Global Experience. So the screen in front of me tells that we have only 25 minutes, but we do have two expert speakers to talk on this, and they have made a presentation. So over to Phil and John.
Great. Can you hear me? Am I audible? Great. Okay. Thank you so much, everyone, for giving us the time to talk on this today. So I'll thank you all for staying, those of you that have stayed. Those of you that haven't realized you can get CPD already, I'm watching you if you try and leave when you found out right now. So, but thank you for staying. And so we'll try and keep this as brief as we can and as engaging as we can. The topic we're talking about today is composites. So I'll try and go through an agenda here today that says, so where are we today? As in, why are we talking about this? Why is this of interest right now? And then kind of go on to some examples of how insurance company license structures operate globally and contrasting that with India. I guess maybe counterintuitively, we'll then start with some thoughts on decomposition. So as in, instead of insurance companies coming together but being broken apart a little bit more, and maybe it'll become more apparent why we're going in that direction first, before Joe will then kind of try and take us through, well, based on this intro, how do we then get to composites? What does it mean? What could it mean? And then we've put a slide at the end called India's Future. I'm always a little bit nervous about giving something like that. I think I've lived in Mumbai for 13 years, and while I hope my actuarial modeling skills have improved over that time, my ability to predict the business and legislative environment in India has improved not at all. I probably have a 99% fail rate on that. But it's good to hear somebody give it a go and give it an answer. Please disagree with the answers that we put on screen as well. It's always good to hear some debate. But we wanted to give you some thoughts on, okay, what could it mean and how do we see it, and what could India's future look like? So without further ado, where are we? Why are we here today? Where are we today? So again, maybe slightly counterintuitively, I'll start with the budget, most recent budget session and the announcement of 100% FDI, which lots of insurance groups globally are kind of excited by and interesting and sort of re-looking at India. And why do we start there? Well, what it means is we're going to get a new insurance act, we hope. When exactly remains to be seen, and maybe a monsoon session we'll get a new insurance act. And according to panels that are being formed and news reports, what we are also potentially expecting as well is, along with that new Insurance Act, not only will we get 100% FDI provisions, but we might now get a provision for insurance companies to have a composite license, okay? So that's how we kind of get here. What does that mean? I mean, maybe actually some of you won't even really know what we mean by a composite license. So if I kind of start, for those of you that are based in India like me, where is India today? Oh, sorry, I'll probably go back one slide. Where is India today? If you think about broadly, and you can cut this up however you like, but if you think about broadly that insurance companies sell non-life, health, and life products in those columns there, at the moment we actually have three sort of corresponding licenses for those. So if you're a life insurance company in India, you can certainly sell life business. Depending on where you want to draw the line, you can also sell some health business, but maybe I would say life companies cannot and do not sell really material health business in India, and certainly not like a lot of indemnity business that you might think of as true health business. If you get a non-life license, then you can actually do non-life and health. And that's pretty common globally as well. What is slightly different is the idea that we have a standalone health license. Again, it's not completely unique globally, but we also have a standalone health license. So you can actually go out and get one of three of these licenses if you want to do your business. And I guess barring the health license, it maps relatively well to what we see in some other parts of the world. I mean, taking the EU and Indonesia, I went and reached out to some colleagues when we were planning this session to try and find out what different countries are doing, and we got some feedback back from them. And essentially, it's quite common to have a life license and a non-life license, but it's probably a bit more common that life insurers are able to do more health. Many of you globally will work in L&H teams, life and health teams, and they go quite naturally together. I don't think we've really seen that in India so much. I certainly, as a life actuary, do know very, very little about health, and that's why I've got Joe on stage. But certainly, it's more common, yes, for non-life to do health, but also life to do some health as well. We'll probably talk about that a little bit more. Interestingly, composites are not really the direction of travel that the world is going in or has gone in over the past few years. We do see, I understand that you can still get a composite license in Singapore, but you have to have segregated funds, and that might become a little bit obvious why that is there in a little while. But generally, I would say for most of the countries we looked at, you actually can, you can get one of two licenses, but composites have really gone out of fashion. And that's kind of what then brings me to this idea of decomposition. So the trend, actually maybe 30 years ago, maybe there were a lot of composites around the globe in different forms. But what we've seen is, especially in the EU as an example, over the periods of the 80s and 90s, and certainly finishing with Solvency II, there was this push by regulators to break up insurance groups, at least into a non-life and a life. So across the EU, we saw this decomposition. Now, what might be slightly confusing is all of the names that we've listed here, as I've undergone decomposition, they're still composite groups. So as a group, they hold life and health businesses. I'm sure they share knowledge. Many of you work in that team. They share certain resources. But those companies and where the liabilities sit and where the premiums are written are entirely separate in most examples. There are a few examples left over. So this was really regulatory driven, this idea that we need to be breaking up insurance groups. We don't want to be having composite insurance groups. We should be breaking them into separate lines. And I guess the question could be why? And so I think, and again, this is not to say this is true or false, but I think one of the concerns of regulators is this idea that when you're writing very, very different business lines into the same amalgamated structure, it's harder to unpick, it's harder to understand, and it's harder to make sure that we're not getting any contagion between the business lines. So, I mean, again, maybe like an example many of you will be familiar with is I don't think that it was a regulatory push in the United States that broke up AIG. It was more about the fact that, during the financial crisis in 2008, AIG received a massive bailout from the US government, and you had problems related to CDOs and all these kind of things bleeding into this massive conglomerate of a business. And so, yes, one of the reasons I think why AIG decided to sell off or IPO AIA was to generate some cash and start repaying that debt down. But I think there was also even a recognition at that time that these kinds of structures may be slightly more worrisome, and maybe this should have been in place, anyway. So yes, it's about taking AIA, which is a very, very valuable business unit as part of AIG, and selling it off to pay back the US taxpayer. But it's also, again, following that trend globally, we see that generally regulators do not like to see anymore these days non-life and life being melded together with very, very different business models. So it's quite a different direction of travel that we might be going under. But again, depending on how the Insurance Act shapes up and depending on how it finally gets brought into law, if it gets brought into law, this could be a reality for us, and there are some interesting implications for it. So I think I'll hand over to Joe to maybe talk a little bit about where there could be some interesting implications for it.
Thanks, Phil. So in preparation for this talk, I went to try and find lots of composites to talk to, and of course in the EU you can't find any composites, so I went to talk to lots of composite groups, and I said, so tell me, as a composite group, what are your synergies, what are the issues that you see, talk to me a bit about your operations. And they broadly put things into three different buckets. So first one they talked about is the obvious one, which is diversification of capital requirements. And this one was a little bit more challenging because under Solvency II, for those of you that are familiar with the regs, there is a diversification credit between life and non-life in the formula for the required capital. And so I talked to a couple of capital actuaries about that and said, so what does that mean in reality? And they said, well, in reality, if you're under standard formula, that's pretty straightforward. However, most of us have internal models. It is not very straightforward to calibrate your correlation matrix. So we spend a lot of time in stress and scenario workshops talking about trying to calibrate some of these correlation matrices and trying to work out, actually, if we have a particular event happen, what does that mean for a whole diverse set of liability risks? So what does that mean if we have a flood event? What does that mean for our longevity risks? If we have a catastrophe, what does that mean for many of the different lines of business that we write? And so we spend a lot of time with many experts in a room trying to work out actually what that means, and we often find that there's some surprising correlations in the tail that we haven't really thought about. So it can be pretty challenging to parameterize some of those correlation matrices, which means in reality, a lot of the capital benefits are not maybe as much as we might hope. So that was the first one. Second thing I talked about, and I've heard a lot of people talk about this the last couple of days, is operational synergies. Now, there are some obvious operational synergies around distribution and marketing, for example. If you are a life company with a huge distribution capability, then why would you not want to use that to sell health and non-life? So there are some definite synergies in the distribution and marketing. There are definite synergies in the asset management side. And I think allied to that, it's fairly obvious that if you're modeling a load of market risks in your RBC, it's easy to think about how you might consolidate that across a composite insurer. There are some synergies in some risk and compliance functions and some of the accounting and regulatory reporting. And there are some in admin systems. And then the functions that you have as an insurer that are maybe much more generic, so your change management function, your project management function, your stakeholder management skills, all of those functions are common across life and non-life and health insurers. So you can see some synergies there. But when I started to dig a little bit deeper into this and said, well tell me in reality, how does that play out? What I discovered with lots of them was much as I would have hypothesized, in that those synergies are a very thin layer across the top, and very, very quickly in those composite groups, you get down into specific non-life, health, life verticals. So although you might think that there's a lot of interchangeability of those skills, actually, in reality, at the next level down, you get into very specialized skills quite quickly. And I'm a health insurance expert. I know a lot about health insurance operations. And I know from talking to lots of life insurers and lots of non-life insurers that most of them have no idea of the operational setup or the target operating model of a health insurer. It is very, very, very different, and you need a very different set of skills to manage health insurance relative to non-life or life. So once you dig down to that next level, there is a huge variation in how you do things that seem on the surface to be relatively similar. So if you're doing medical underwriting as a life insurer, you think, how hard could it be to do medical underwriting as a health insurer? And the answer is, it could be very hard. If you're doing claims management as a life insurer or a non-life insurer, you think, how hard could it be to do claims management as a health insurer? And the answer is, it is very, very difficult. So your sources of value in your target operating model from those different verticals are quite different, and that means some of the interchangeability of those skills is not necessarily as much as you might think. And then the final category that I looked at is, of course, the actuarial function. What does it mean for the actuarial function? So you might have one chief actuary or group chief actuary of a composite, and they might come from a life or a non-life or a health background. But again, in reality, they're sitting at the top, and the next level down are all specialized. The next level down are all life or non-life or health. And that's something that we've partly driven ourselves from our exam structure. So we've gone down a route in the last 10, 15 years of being very siloed and very deep specialist technical knowledge in a particular direction. So I did my exams 25 years ago. I had to sit exams in pensions and life and non-life, not health because we didn't have health in those days. But I had to sit exams in all of the different disciplines that we have today. And I know when I talk to my analysts in my team coming up that I often find surprising gaps in their knowledge because they've had to specialize so early. And because my team do health insurance, I need them to know about pricing and I need to know about reserving. But if they've come through the exam structure, they choose health and then they have to choose reserving or pricing. I'm like, well, I need them to know about both. So we have some gaps because we've gone down this siloed route. And at the same time, a lot of that's been driven by regulators who are looking for very deep technical skills. So that tends to play out with, as I said, you might have a chief actuary at the top of a composite group, but you very, very quickly get down into very specific specialist technical skills because the models and the experience of the business and the operating models are very different.
Right, okay, so what we've looked at where there could be some synergies, we've looked at where there might be, we're expecting to see some synergies and they may not be there. So let me try and, I'm glad Joe gave me this slide, so I'll stick my neck out and say what do I think it all means and where could we go and what could it look like. So let me try and talk you through this right now, and maybe I'll bring out 3 key themes that came to me when I was looking at this. So imagine tomorrow you're allowed a composite license. Maybe you have to apply for that, or maybe just everybody's license automatically converts to composite. Who knows? But what could we see? So would we see some composite companies? I think we probably would. I think even though there are some places where you would need to maintain separate structures, there are certainly some groups that you could imagine, and the names spring to mind, people who might want to come together and try and benefit more from some of those operational synergies. At least in the life space, we know that the insurance business in India is a scale game. Anything you can do to get your operating expense ratios down, any kind of synergies that you can find could be really, really interesting. I guess obviously one thing that's, maybe if we'd been looking at this question 25 years ago when the sector was opening up, maybe the answer would be different. But today, joint ventures have gone off in very, very different directions. One multinational's life insurance partner may not be the same as their non-life insurance partner. How would you merge that? How would it work? So again, I don't know necessarily whether it would even be obvious how you would make a composite out of some of the businesses that are out there. Are some people going to be ripe for acquisition? Potentially, maybe. But definitely we would see some true composites emerging, but maybe not on this mass scale that all of a sudden all of the businesses become true composites. So yes, along the top there, maybe we would see some composite companies. What I think maybe is definitely more short-term impacts would be some more tactical moves into allied areas. Some of you would already know that some non-life companies would very much like to do a little bit of life to attach it to some of their covers, right? So maybe we slightly edge the non-life companies into life, or it's a bit more natural for you to bundle a little bit of life with some of your non-life. Again, as I was saying, maybe the life companies now see this as an opportunity to start getting into health a little bit more. Can they get all the way into health the way the health guys have done? Maybe not. Maybe they can. But certainly we would see in the life companies seeing this as an opportunity to maybe do a little bit more on the health side. And so if we think about composites as some sort of 3-circle Venn diagram, maybe the interesting point is not right the middle of that Venn diagram, but it's around the edges a little bit more where non-life does a little bit of life or a little bit more health maybe, and we'll see how that works out. But the other thing I would probably mention on here, which I found very, very interesting, was along with the idea of composites that's been kind of proposed, is the idea that insurers might be able to sell third-party products. Okay, so at least in the life insurance space, I think the life insurers, many of them will look at their distribution partners and be very jealous They'd much rather be a distributor than a manufacturer. And maybe it could be a time for those life players, for example, to say, hey, we've expanded into all these banks, we've expanded into all these networks, and now let's tie up with Asahi and distribute their products for them, and now we can be the ones getting these big commissions, and rather than having to deal with risks and underwriting and things like that. So third-party distribution, again, very much speculative about whether it will come in, but somebody may look at the landscape right now and say, rather than become a composite as a manufacturer, can I bring a composite offering to my customer by doing more third-party distribution and leverage the networks that I have right now? So that's also potentially something to look out for. Obviously, the devil will be in the detail in the act, and what does it actually really say, and what restrictions are there. But these are some thoughts about what composites could mean. And we've got 5 minutes left, so probably hand it back to Ashish.
So I open the floor for the questions. So if you have any question, please raise your hand and wait for the microphone to reach out to you. Yes.
I can't hear anything.
Hi, thanks for the very insightful session. So you mentioned about the requirement of chief actuary in the group level in a composite structure. So currently in India, the appointed actuaries are highly regulated, and there is appointed actuary regulations in place where it specifically mentions the qualification requirement, the experience requirements. And that's being prescribed by the authority, a regulatory authority of India. So that kind of same structure is there in those countries where this composite license structure is there. There is any requirement for chief actuaries qualification or experience requirement? And within the chief actuary, when you have the sub-verticals, life, non-life, and health, the specialized, is there any requirement from the regulator or the institute body there?
I think it very much depends on the country. So in the UK, actually, you don't have to have a chief actuary at a group composite level. It was left out of the Solvency II legislation, and there was no requirement. But most companies decided that they would have one for obvious reasons. But the only requirement was to have one at the regulated entity solo level. So it was kind of a gap and left up to each composite to decide how they wanted to tackle it. And we've seen different people with different skill sets fill those roles. So some have come from a life background, some have come from a non-life background. It's quite a variation.
Yes, please.
Yep, less of a question and more of a comment. I've worked for European and American publicly listed companies, and one challenge that will come up is the difficulty for analysts to understand the different types of insurance, because they'll be viewing the life business through non-life eyes or vice versa, and giving a discount when they don't understand.
Yeah, I think it is challenging. I say once you get to that next level of detail, trying to understand the dynamics of the business is hard. And I certainly remember years ago talking to an actuary friend of mine who worked at one of the rating agencies, and he'd come from a life background, and calling me and saying, I'm trying to work out what's going on here, but I know nothing at all about non-life reserving, and I don't understand anything I'm looking at. And I think it is increasingly challenging because people have developed very much with those siloed skill sets, and we don't have that many people left that can look across the whole picture.
Hi, Phil, I'm going to put you in a spot a bit. I think you have given lots of pros and cons for each of these.
We're friends, it's okay.
Yeah, perfect. So now a direct question. If you are the CEO of, say, one non-life, health or life, what would your decision be for the current environment that's there in India? So 3 questions for you.
Okay, if I was each of them. Oh, I mean, obviously, you've really put me on the spot there. That has no answer. And if I had the answer, I wouldn't be sitting on this stage. I'd be,
Rich.
Yeah, I'd be a much richer man. I guess, so maybe I'll try and answer it from a life standpoint. Yeah, again, I would be thinking about how I can leverage my distribution network. I don't think it's obvious. And I'd be looking at health. Right? I don't know that I would be looking at non-life, really. I but I'm sure there are definitely use cases for that and reasons to do that. Again, would I build or buy? Maybe I'd want to buy rather than build. I think it's, as Joe says, a very, very tough environment. Would I manufacture or distribute? Again, it's fun to be a distributor in India. You've got the keys to the castle and all the money. So yeah, maybe I would try, if I can, maybe I'd try and do third-party health as an additional bouquet. But again, I mean, if Banco was a good channel for health, it would already be a big channel for health, right? I don't think it's a lack of composite licenses that has prevented that. So it's not, I mean, there's no slam dunk here, I think. I don't know if you have any thoughts, Joe.
No, only maybe to reinforce that if I was the chief actuary of a life company, I'd be seeking out some specialist health skill sets quite quickly. I would worry about my lack of understanding of that operating model. And not just of the traditional actuarial pieces of it, so how does the pricing, reserving, underwriting work, but some of the claims management pieces I think can be really challenging, and you quite often end up in a situation where you're trying to assess how good your claims management capability is, and then thinking about how you're going to set your rate of medical inflation, which is very challenging in lots of different markets. So I would be worried about my ability to understand some of those dynamics.
Hi. So do you think with the increase in composite insurance companies, will there be increase in products which one product covering all? And if that is the case, how will the reinsurer support us? There would be less data available for such kind of products.
I guess the reinsurers are kind of composites already, mostly. So I think hopefully they, more risk, more pie to share. I hope they'd be. We've got lots of reinsurers here. Maybe I shouldn't answer on behalf of them. But yeah, I guess what I like about composites is just adding degrees of freedom to our business models, and I think that's been a little bit of a theme of the regulatory environment over the last few years. Things like use and file, things that just give us. Do we expect a radical change overnight? Maybe there is going to be some new flashbang composite product come out. Maybe that will work. But does it just give us a few more degrees of freedom to do what we want to do and meet the customer where they are? Maybe there's a use case for a customer where a composite sale, or even just if I fail at life, I can try at non-life and just give me some more operational synergies on the distribution side could be there. So I don't know that there's any, necessarily it will create a particularly new type of product that we've not seen before, but it just kind of gives customers and insurers just a few more options and ways to attack the sector rather than being sort of siloed so much and forced into silos that maybe are slightly artificial.
So Phil and John, one question from me as well. So can you also share some global insights on the customer value propositions offered by the composite insurance companies?
Sorry, I have terrible audio up here, so I can't. You might just speak to me without the microphone.
So can you share some global insights on the customer value propositions offered by composite insurance companies?
Well, we don't have that many true composites, right? So the composite groups that I see actually haven't done a good job of bringing together the different types of products and bringing them in a good customer value proposition. The place that I see the best practice around that is really just around branding. So when you dig under the surface again, there's not a lot going there, and people talk a lot about 360-degree views of the customer. Very few have that, in my experience, but they do leverage their brand quite successfully across those different areas.
So our time is up. So thanks, Phil. Thanks, Joanne.